I'm Debra Taylor, Managing Partner and Chief Tax Strategist at Carson Wealth Franklin Lakes. I'm here to talk to you about the 5 tax gotchas in retirement. Now you might say, what is she talking about? Tax gotchas? Retirement is a time to relax, have fun, travel, spend time with your grandchildren, and all of that is true. But the other thing that's true about retirement is that the government wants a piece of the action. The government wants some of your hard-earned money, particularly if some of that money is stashed away in traditional retirement accounts, IRAs, or traditional 401ks. The government for many years has been a silent partner in those retirement accounts. And once you retire and hit the age of 73, the government is basically standing there with their hand out, wanting a piece of that money, a piece of that wealth. And so I wrote an article, and it's actually one of my favorite articles, and it talks about the 5 tax gotchas. And so what are the 5 tax gotchas? What are the things that you need to be thinking about as you head into retirement or as you continue in your retirement? Number 1, RMDs are for life. And what I'm saying then is that if you have a large traditional retirement account, those RMDs are going to start at age 73, and I basically call it the Roach Motel. Once you check in, it's very difficult to check out. So that's one thing that we would need to deal with. Number 2 is the expiration of the Tax Cut and Jobs Act, which is happening at the end of 2025. And so that is something we need to keep our eye on because a lot could happen over the next year or two and maybe beyond in connection with the expiration of the TCJA, which could increase tax rates for many of you and also cut the lifetime exemption possibly in half, which could create estate planning challenges, particularly if you wait too long to address it. Number 3 of the 5 tax gotchas is the widow's penalty, and I cannot tell you how many prospects and clients have no idea what the widow's penalty is. The tax code is designed very unfavorably to single people, and whether they're single because they are divorced, or they've always been single, or in many instances they're widowed. And what happens then is that a single person is filing single, and yet in the case of a widow, she has the money and the wealth that she had as a couple. She has all of that, or most of it. But now she's filing single, which basically means that those tax brackets are cut in half. And we call that the widow's penalty. And that can be very, very expensive for a single person as they age in retirement, and particularly if they have a large IRA and those large RMDs. So you can see how all this starts coming together to create those tax gotchas and to create a world of trouble for folks who are not prepared going into retirement. The 4th tax gotcha is trying to leave that large IRA to your children in a tax-efficient way. And years ago, we were able to do that. But thanks to the Secure Act of 2019, the government changed the rules on us. And now when you try to leave that large IRA to your children, they're going to be taxed very aggressively. And maybe close to 40 or 50% of that IRA could end up going to the government, which I know is something that you would not want to happen. The 5th tax gotcha is that estate planning is starting to get trickier and trickier. And we just referenced that. Part of the expiration of the TCJA, which is totally up for grabs, and part of it is the folks in Washington need money. They need revenue. And who better to get that revenue from than working folks like yourself? And so those are the 5 tax gotchas. Those are the things that every day and day in and day out that we address at Carson Wealth. We help to strengthen our clients, protect their wealth, help to grow their wealth, and particularly try to limit their lifetime taxes, which can amount to millions of dollars. And we call this the Carson Wealth Tax Difference. We have special technology and training in performing advanced tax planning, looking out over your life expectancy, celebrating the growth of your portfolio, and limiting those lifetime taxes. and then developing a roadmap of strategies to drive down those future taxes. These strategies, which include distribution planning and optimal multi-year Roth conversions, can help to save hundreds of thousands or millions of dollars over a lifetime and help preserve assets for future generations. We use advanced tools, our extensive training, and a lot of passion to protect our clients. Thank you for listening today. Let us help you on your path towards financial freedom. And we look forward to hearing from you, so please don't hesitate to reach out to us. Thank you.